Hello and welcome to today's video on high altitude investing. Today is going to be Trading Strategies episode 2, and this is a week-to-week trading plan that I've developed for trading cryptocurrencies on Poloniex and stuff like that. So, whether you're BitRX or whatever exchange you use. Again, my name is Dallin Anderson, and this channel is dedicated to cryptocurrency trading and teaching people how to do it. So I have a Bitcoin tip jar. If you like what I'm doing, go ahead and donate. But yeah, so let's get right into this. Okay, so again, documents as always in video description. So you guys have full access to this document, and you guys can also comment suggestions if you like. If there's something you want me to change, or you feel like there's something we can fix, then just go ahead and comment on it, and I'll look at your comments and suggestions. Now, again, disclaimer: there's risk involved in trading. This is just how I do it, and obviously, I do not take any responsibility for losses that occur from this advice. Okay, so first of all, the settings for this personal trade. This is how I generally make my strategies. I have settings, risk, entries, exits, and stops. Because if you don't have a plan when you're trading, you're probably going to screw yourself over. In fact, I can almost guarantee you're going to screw yourself over if you don't have a plan. So yeah, the settings I have are a Heiken Ashi candlesticks. So you can change those by clicking under the candlestick bar style, going from candles down to Heiken Ashi. The reason for that is because of how I determine when the trend is done. So I'll explain what I mean by that in just a second. So I use Heiken Ashi candlesticks. I'm usually looking within about a 1 week time frame, give or take. They're 1 hour candlesticks, by the way, and the market has to be trending up. So those are the settings and requirements for this trade. The risk management I'm using is no more than 10% of total account balance per trade. So whatever your total account balance is in Poloniex or whatever exchange you're using, don't use any more than 10%. I'm using Coinigy. This just connects my Poloniex to this much better charting service. So basically, I'm just trading on Poloniex with this website. That's basically what that means. Now, yeah, so you don't want to use any more than 10% of your account balance for this trading strategy that I've developed. And entries are very, very key. You can only trade markets that have broke out of bottoms, so they have to be trending up, and they have to have broken out of a bottom recently. Okay, so you don't want it to have been trending up for like a super long time. The closer you are to the bottom, the better. You also want to have 7 red candles before you draw your fib retracement. So I'll get into that in a second when I actually do this. And the second fib retracement has to be from the first fib retracement low still. So I'll explain that in a second too. And you want to be looking at the 0.382 fib line, and you want to buy bearish candles. So you want to be buying in a red candle, and high volume helps. Exits are 40% increase from entry, and stops are 10% down from entry. So let's get into trading this plan and see how you'd go about doing so. Okay, so I have 1 hour candlesticks. This is Z Classic, and this is 1 week time frame. It's a little longer in a week time frame here. This is actually a couple months, but just as long as you're not looking like an entire year. This is a shorter term trading plan, so you don't really need to be looking at that big of a time frame. Big time frames are only really useful if you're trading a big time frame. Yes, they have their place, but you don't want to be dependent on that, okay? Because it will confuse you. So this is how I've defined that it broke out of a bottom, because here's our 1 point, here's our 2 point, and here's our 3 point. Okay, and then so this is what you look for. You look for a 1, 2, 3 bottom. This is a pretty big one. That's key. And then it broke out of that 1, 2, 3 bottom right here. So if I was testing this trading plan, I'd notice that 1, 2, 3 bottom formation, and when it breaks the 2 point, I would be looking to trade. So right here is when I'm like, okay, the market is tradable. So, you know, did you see how I was just clicking through these candles with my arrow sticks? Or arrow candlesticks with my arrows. So right here is where it broke the 2 point, confirming that I can trade this market with this trading plan. So now I'm looking for how many red candles? 7. So there's 1, 2, 3. Oh, so I don't look to trade this market yet. Well, I'm looking to trade this market, but I'm not looking to draw my fib yet. That's what's key. This is where I look to draw my fib. Okay, is after 7 red candles. Okay, there's 1, 2, 3, 4, 5, 6, 7. Okay, excellent. So this would have proven to be where I draw my fib. So where do I draw my fib? Well, I draw it from the recent low. So I don't do all-time low. I don't do 1, 2, 3 bottom low. I draw it from recent low. Okay. This is also written in the trading plan to recent high. All right. So do you see how on this Fibonacci retracement there's this 0.382 line, or the 1, 2, 3 third line down from the retracement? This is where I'm looking to enter. So I put a buy order right here. Okay. So I'd fill my buy order. Now once I have a buy order in, because this market has fulfilled my, fulfilled everything so far requirements to trade this market, it broke out of a bottom formation, and it has 7 red candles, so I can draw the fib retracement. It's got pretty good volume, and it's trending up. So I have my buy order set at 0.382. So let me just go ahead and maybe I'll just write that down here. Oops. Okay, so I'm looking to buy at 0.00185708. So that's my entry. Okay. Now I want to calculate my stop loss. So what is my stop loss? Well, my stop loss is if it goes down 10% from the entry price. So I'm going to type in my entry price right here, which is okay. So I put my entry price, again the percentage calculator is right here if you need it. I put my entry price on the second one, and then I do 90%, right? Because 90% is see, it asks what is 90% of, right? So I just do the math in my head real quick. Since it's a 10% down from the entry price, that would be 90% of the entry price. Okay, so what's 90% of 0.001852? So I press calculate. Well, it's 0.00167. So I put my stop loss 0.00167,137. Awesome. Okay, so that's my stop loss. Now let's just go ahead and draw a line. What this would see how I'm testing this trading plan in the market right now. Back testing is key. I have a video on it. So go ahead and check that one out too. So let's see. That would mean that my exit price is, or my stop loss, I mean, is 0.00167. So let's see, 0.00167. Let's just draw a horizontal line right here. 0.00167. 1671. 167. Okay. Now I'm just going to draw this line across. Okay. That way you can see where your stop loss is. So this is my stop loss. Oops. Oh, shoot. See if I can go back. Okay, cool. So this is my stop loss at this price, and my entry is at this price. Okay, so that's pretty key. Stop loss entry right here, stop loss right here. Now I would be in this trade. Now I'm looking to exit this trade at what percentage increase? Well, a 40% increase. So let's see what my exit price would be. Our entry is 0.00187. So I'm going to go ahead and copy this. All right. Now I type this in again. Paste. Oh, I guess it was already there, so I wouldn't have needed to do that. Now I do 140%. Okay. So with this website, you just imagine there's already 100%. And then you just calculate whatever direction, minus or plus, for the increase and decrease calculations. Okay, so 140 would be 0.00259. So our target exit price is 0.0025999. So that's our exit price. And that would be a 40% gain. So let's see where the market would hit the, let's draw our exit price, 0.00259, 0.002. Oops, let's go back a little bit, okay? That way we can properly draw our exit price before we test this market. 0.00259, 0.00259. So that's basically right at the top is where we're looking to exit this trade. So let's forward test this market. Okay, it's looking good, looking good. Still be in this market because it hasn't hit our stop loss, which is again right here. Here's our stop loss line, and again here's our entry line. So we're still in this trade, we're still good. And here's our target exit. We're still good, still good. We haven't entered, exit, or stop. I mean, we have entered, but we haven't exited or stopped. Okay, good, good. Everything's good. We'd still be holding this trade, forgetting about it. Still be in our Poloniex. Again, this is a little bit longer term trading, Ooh, that came pretty close to our stop loss. But because we have rules on when to enter and exit, we wouldn't have exited. Okay, keep going, keep going. Alright. See when it goes. Oh, and ta-da, the market hit our exit right here. So this is where we would have exited that trade with a 40% gain. Okay. Now that we have a new high, we watch for 7 red candles. So let's zoom in here. 1, 2, 3, 4, 5, 6, 7. Okay, so that would officially be where we can come in to draw our fib retracement again. Now for the second fib retracement, this is very important because this is a 2 fib retracement trading plan. You draw from the low of the first fib retracement and you pull it up to the low of the to the high, the new high of our second fib retracement. Okay, now we want to look to enter this market, 0.318. or 0.382. So we would be entering this market right here, and then we want to set our stop loss at 10% of that. So what's 10% down from 0.00255? 0.00255. So what's 10% down of that? That would be 0.002295. So this would be our stop loss, 0.002295. Let's find that. .002295. Oops. Oh, no, 0.00255. You want to make sure you've got your numbers right. 0.0022 or 255. 0.00255. Oh, no, yeah, 0.2295. What am I doing? Silly me. Alright, so here's where our stop loss would be set. Ooh, and let me say, it did come real close to touching that stop loss, but thankfully it didn't so far. Yeah, no, it would have to go just a little bit lower to touch that stop. So we wouldn't have quite got stopped out here or here. Sometimes you would on a trade, but it wouldn't matter, right? Because you've already gained 40%, so 10% loss is whatever. If you stick to your trading plan, you don't do based on emotion. So right now, here's our current entry price, and here's our current stop price, and we're looking to exit this trade at a 40% gain. So what's 40% of our current number? So we type in 140, calculate. That would be 0.00357. 0.00357. Okay, so this is about our exit target. And again, you know, normally you want to be writing all of these down in your trading log, but because I'm just back testing this trading plan of mine that I have made for you guys, I'm just doing it like this. So, you know, this would be where we'd still be holding this trade. As you can see, I actually really did enter this market according to this trading plan, because I really actually trade these trading plans that I teach you guys. And right now I'd be holding and looking to exit at my target exit or get stopped out. So that's basically how I do, you know, mid-term, a little bit longer term trading, you know, a couple months or so tops, and that's one of my trading plans for it. So I hope that this video helped you guys understand some things and how to calculate some things, and maybe help, you know, develop your own trading plan. Go ahead and let me know if you have any questions in the comments below. You can get a hold of me at highaltitude, on Twitter at highaltitudeinv. Email me highaltitudeinvesting@gmail.com. Check out my website, highaltitude, so altitude investing.com, to check out my website. And yeah, I believe that's everything for today. Thank you all for tuning in, and I will see you in the next one. Stay profitable.